All right, today we're diving into Westrock Coffee, a company with some absolutely explosive growth that's got a lot of investors buzzing. But, and this is the big question, is this real sustainable growth, or is there something else going on under the hood? Let's get into the analysis and find out.
So, you're looking at a coffee stock that's growing like a weed. Is this thing the real deal, built for the long haul, or is it more like a quick caffeine high that's just going to lead to a crash later on? That's really the core question we're trying to answer today.
So, here's our game plan. First, we'll figure out what Westrock actually is. Then, we're going to give it a full financial checkup. After that, we'll weigh the good against the bad, try to pin down a fair price, and then, finally, we'll get to the analyst's official verdict. Okay, first things first. We've got to know exactly what this company does. So, who or what is Westrock Coffee?
You know, Westrock isn't the kind of coffee brand you'll probably see on a supermarket shelf. They're the ones working behind the curtain. They're the engine that provides all the coffee, tea, and extract solutions for big-time retailers and consumer brands. So think about the private label coffee at your local grocery store. Yeah, that's probably Westrock's handiwork.
And this is the number that gets everyone excited. A whopping 48% growth in revenue year over year. I mean, that's huge. It screams high demand and tells you they're landing new clients left and right. It's the main reason this stock is even on our radar. But, as you know, that top-line number is only part of the story.
Okay, now it's time to look past that flashy growth number and really check the engine. Let's do a deep dive into the company's actual financial health.
This slide really captures the whole story in a nutshell. It's this classic tug of war. On one hand, you've got that amazing revenue growth, but on the other, you have this really troubling negative profitability. It seems like the company is literally buying its growth, and, well, that's a dangerous game to play.
And here's the proof. A negative 7.61% net profit margin. Just let that sink in for a second. For every single dollar in sales that Westrock makes, it loses more than 7 cents. So even though they're pulling in tons of revenue, they are just not profitable.
And it gets worse. Look at this, a return on equity of negative 28%. Now, this is a super important number for investors. And when it's this far in the red, it's basically saying the company is taking shareholders' money and destroying its value. A major, major red flag.
So if you're not making money, how do you fuel all that growth? Well, you borrow. And boy, have they borrowed. We're talking $683 million in debt. To put that in perspective, that is more than the company's entire value on the stock market. That adds a huge amount of risk to the equation.
And lastly, let's talk about cash flow, the lifeblood of any business. Well, it's negative. The business is burning through cash, not generating it. And that means it has to keep relying on outside financing, which, as we just saw with that massive debt pile, is already a huge problem.
Okay, so we've got all the raw data in front of us. Now let's see how the analyst puts it all together by weighing the strengths, the weaknesses, the opportunities, and all the threats.
Now, this weighted analysis is super revealing. Just look at how the analyst weighted these factors. Weaknesses, the high debt and the losses we just covered, they get the heaviest weight here. That really pulls down the overall score, and it kind of puts a damper on the excitement from that high score for opportunities.
Given all this risk, the analyst mapped out a few different ways this could go. In the worst case, or bear scenario, the stock's value is maybe $1.50. The base case, if things get a little better, puts it at $2.10. And even in the best case, super optimistic bull scenario, it's only $4.50. It just goes to show how wide the range of possible outcomes is.
All right, so this is the million-dollar question, isn't it? With all this uncertainty, what's a fair price to pay? Let's see what the valuation says. And here we have it. The analyst's calculation of what the business is actually worth, its intrinsic value, lands somewhere between $2.10 and $3.50. Now compare that to where the stock is trading, over $5. That is a massive gap between what the analysis says it's worth and what people are paying for it. This table basically works backward. Let's say your goal as an investor is to make 9% a year over the long haul. Well, to hit that target with this stock, the math says you need to buy it at around $3.20, which is way, way below where it's trading today.
Okay, it's time to bring it all home. Let's look at the final verdict and see how all this analysis shakes out into a final call.
The risk score clocks in at a pretty scary 7.6 out of 10. And that shouldn't be a surprise, right? This is all because of that financial instability we've been talking about. the mountain of debt, the negative cash flow, and just the huge question mark over whether they can actually pull this off.
And what about the opportunity? Well, it's just, okay, a 6.1 out of 10. Sure, there's a chance for a big payoff if everything goes perfectly, but according to this analysis, that potential reward just doesn't seem big enough to make up for all that risk.
This quote from the source material just nails it perfectly. The market is totally buying into the growth story, but it seems to be completely ignoring how incredibly hard it's going to be to turn all that growth into actual, real profit.
And so, it all comes down to this. The final, no-nonsense verdict from the analysis is to avoid this stock at any price above $3. Plain and simple. So let's just quickly recap. Westrock has that amazing growth, but it's built on a really shaky foundation of losing money and being swamped in debt. The stock looks way overpriced compared to what it's probably worth. You need a huge margin of safety, which is like a built-in cushion, meaning you'd have to buy it below $3 to even consider what is, right now, a very speculative bet.
And that's our deep dive into Westrock coffee. I really hope this explainer gave you a clear picture of what's going on. Now, I want to hear from you. What company should we put under the microscope next? Let us know in the comments below.